right, Mr. Patrick Francie, we are here for an animated version of Missing Millions. That is an animated version of Missing Millions. So, not to be a special edition of Missing Millions. Now, folks, how this happened is Patrick calls me up one day and he says, JG, I have a fantastic idea. I think we need to dig deep and to show examples of how leverage is so important in real estate and to the REIN community. Isn't that right, Patrick? You called me up real excited one day.
I did, because it was kind of a realization that we get what I see real estate investors often stepping over when we talk about leverage. So within REIN, we talk about leverage, and we see leverage happening in different ways. So we see people that leverage the research. So when we talk about research and investing in real estate based on research, you're actually leveraging that research to make decisions, or you're leveraging the collective intelligence of the community. You're leveraging like-minded individuals, your network. That's all about leverage. But in this conversation, we want to talk about leverage because real estate investors understand leverage at its simplest level. But let's take it to the next level, JG, where we take an initial investment and then go, well, where else do we leverage? And some people step over that. And I think it's what gets in the way of many of taking the real estate investing to the next level.
Really good point, Patrick. Let's start really at the roots, the basics of what leverage really is. Let's just say, folks, we got this ball, okay? And let's just say this ball weighs 250 pounds. Very difficult, very heavy for you to pick up by yourself. It's not happening. It's just not happening. So then what you do is you decide, I'm going to be a little bit smarter. I'm going to go back to my ancestors, the old caveman and cavewoman. I'm going to do what they would have done. I'm going to get myself a little box, let's say right here. What's this called again, Patrick?
That's a fulcrum.
That's a fulcrum. And then I'm gonna get myself a board. Okay, I'm gonna get myself a board, and I'm gonna apply force here, press down, and I'm gonna be able to lift this 250 pounds very, very easily. And the reason that that's possible, Patrick, is because of leverage, isn't it?
It is. That's
now,
simple physics.
And since we're not physicists or mathematicians, we're not going to try to explain why this happens. We just know that this works.
It doesn't matter. It just works, doesn't it?
But that's actually a point to our first point to this, Patrick, is you don't have to understand sometimes the absolute, existential details of everything to take advantage of it. The fact is we know that if you put a fulcrum there, you put, say, some type of piece of wood or something, you'll be able to lift that 250 pounds because of leverage much more easily. And Patrick, this is the same in real estate, isn't it? So relate this example to real estate.
Well, in the real estate world, what we're trying to do is leverage the capital that we have available to us, right? And so when we say, okay, well, we'll use simple numbers. I've got $100,000 to invest. And in this case, you just wrote 20%. That represents 20% of what I can buy. And in this case, that would be, I can buy a $500,000 house. Well, how do I buy that $500,000 house? I leverage my money. The fulcrum in this case, by the way, would be the bank. So we're leveraging our capital. And I think everybody understands the fundamentals of that. If I leverage my money to get a bigger return on my investment, what am I doing? If I was to invest that in the stock market, dollar for dollar, I buy $100,000 worth of stocks. If that stock goes up or those stocks go up 10%, I make $10,000. Really simple math, often a really common example used. So then, of course, I'm going to take that money, I'm going to leverage it. Well, when I buy real estate, that $100,000 will buy me a property for $500,000. And if the property goes up 10%, I make $50,000 on that same $100,000.
Okay, so just slow down there, Patrick, because I think right there, I think you have to slow it down and explain how come you made, why is it $50,000? How did I make $50,000?
Okay, so in the stock example that we're using, if you're buying you're buying a portfolio of stocks for $100,000, that's an exchange of dollar for dollar. You're not leveraging that money in this example. So if those stocks go up 10%, you now have $110,000. In the world of leverage, if I take that $100,000, I use the bank as my fulcrum, as my leverage point, I can buy a house for $500,000. Now, if that house goes up 10%, it's going up 10% on $500,000, which is $50,000. So the same $100,000 that I traded dollar for dollar and got 10% on, which made 10 grand, I've leveraged my $100,000. That property went up 10%, so it went up 10% on $500,000. Now that's the basic concept of real estate in the leverage conversation. Now, that's understood by most real estate investors, quite simple. The conversation that we step over or it does not get discussed is, well, okay, where does that leverage really start to show up? Now, in the long-term investor game, and without complicating it and talking about, fix flip, fix refi, do all those things, BRRRR methods and all this stuff. Let's just look at a long-term investment. I can take that same $100,000, I buy that property, and I paid $500,000 for it. Now, over the course of, let's use a 10-year window. Let's use 10 years, JG.
Okay, so this is a 10-year example.
Yeah. And without getting into compounding and all the rest of it, let's just say it goes up the rate of inflation and just say it's 2%. Now, if you're in Ontario, you're going, yeah, well, that's crazy. It's way more than that. And if you're in Alberta, we're hoping it's 2%. So let's just use 2% because that's what the government is the benchmark they're using in terms of a rate of inflation.
Yeah.
So 2% a year, over 10 years is 20%. Rough math.
Yep.
Okay. So that means your property went up $100,000 in 10 years of appreciation. Now, that's pretty good. That's pretty cool, but it's 2%, not too exciting. So where's the rest of the math? Because we got to do the rest of the math now on this real estate deal. Along the way, we borrowed money. In this case, we borrowed $400,000, which is the deposit of $100,000 less the purchase price. And then we take it to the next level. Now, the next level is what? We have mortgage buy down. So if we use you can get money today at 2.5%. There's a very strong argument that will carry it out, but just for this example about leverage, so don't get it caught in, well, this is not going to work and it's not going to be 2.5% forever. We don't care. That's not the point of this conversation. Point is we're going to use some math. So 2.5%, 12 years or 10 years, $12,600 per year. We're buying the mortgage down. So $126,000 over the course of 10 years that we buy that down. Plus the $100,000 we invested, plus the $100,000 that it went up in value. The next thing you know, we've got $226,000. Where did the 274 come from?
Isn't it? You got $274,000 mortgage.
Oh, right. And the 274.
400,000 minus 126,000 is 274,000.
Yeah, you got appreciation of 100,000. So now then, 10 years later, we go to the bank and we say, my mortgage is 274,000. The value of the property is 600,000. Correct?
Yep. Correct.
Okay. So now we say, well, we want to buy another piece of property. So I can go and get 80% of that 600,000. Less the existing mortgage, right? Now I have $206,000 that I can now go take and buy another property. Well, actually, I can go buy two properties probably, right? How can I buy two more properties? Well, I'm going to do exactly the same thing. I'm going to put 20% down. So I'm going to look again. I'm going to look at a $500,000 property, or maybe they don't exist anymore. Maybe I have to pay $600,000. some version of that. Here's the fundamental. Now, JG, we can extrapolate this over another 10 years. So now we're 20 years in. And what have we got? We've got 3 properties that have all continued to appreciate.
Yep.
We've got 3 properties where we've had mortgage buy down. And by the way, that is what our clients, our tenants have paid. They bought that mortgage down.
Yep.
But we didn't invest more than the initial $100,000.
That's the only investment you ever made was $100,000. So let me just get this straight, Patrick. Not only did I leverage my first $100,000 to buy my first property and have a $500,000 nest egg property called $500,000, but then I leveraged it again at year 10. I took out that cash, and my first $100,000 now has become 3 complete properties.
Yes.
Wow.
So now you take the first property that you paid $500,000 for. We know after year 1, just on 2% appreciation. Let's just keep that.
Yep.
Now that property is 20 years old, and now it's increased, more, but we'll say 40%, right, on the first property.
At that point, if you keep going 2%, 2%, 2%, it would be worth $720,000. Each property you own would be worth $720,000.
Right, value. Then you got mortgage buy down.
Total, you'd have essentially you'd have mortgages that are only $336,000 each. So if you wanted, you can keep going, couldn't you, Patrick?
Good. All from that now. So think about that. So in 20 years, not everybody's going to be a full-time real estate investor. They got brilliant careers. What are we trying to do investing in real estate? Not everybody wants to make a living investing in real estate. What we're trying to do is create a financial future, that security, that certainty, that financial freedom. And, even in this scenario, which is so fundamental, right, is that you buy 3 properties in 20 years, over the course of 20 years, what have you got? You've got a portfolio worth let's say 2.2 million, 2.1 million.
Yep.
You do the rough math in your head.
$2.1 million of value, and you got over $1.1 million of equity in your properties.
And oh, by the way, your rents have probably gone up. The cash flow, we didn't even talk about cash flow. Why didn't we talk about cash flow?
Well, because cash flow, we're going to leave it in the property just to continue to maintain the property, increase the value of the property, and continue to keep it going. And in that, even if you don't touch the cash flow, Patrick, you still have $1.1 million of equity built up in this little beautiful business, which is incredible. If you consider the cash flow, and if you have 3 properties, Patrick, whether it's a single family or a duplex properties or a suited property, whatever the case may be, every one of these properties is probably going to generate you somewhere between $2,500 to $3,500 a month. So you really, at the end of 20 years, Patrick, you'd probably have a little gold mine here that's worth $1.1 million and generating somewhere between $6,000 to $10,000 a month in terms of some type of retirement for you.
And here's the thing, you only invested $100,000. Now, the money that you're getting paid on rent, by the way, is in that time frame. So talk about inflation, talk about all the things. That's what's powerful about. That's another thing that's really powerful about this. So it's all to say that real estate doesn't have to be, and these are very, very conservative numbers, JG, because in that 20-year period, there's all sorts of things you can do to buy mortgages down faster and be more efficient. And there's all sorts of stuff around that. But when you're looking at, okay, I've got a career, I just want to continue to build my existing business, real estate's just something for the future. Well, if you're really looking at a financial future, this is why real estate is so powerful. And the reason for this particular Facebook Live, JG, is guess what? It was $100,000 that you translated into 1.1 million, okay, plus cash flow. That's truly leverage. And I think it's just one of those things that isn't talked about because people think in short-term horizons. At Rain, when we talk about leveraging research, we're saying look into the future. So now what have we got going on? We've got COVID, we've got an economic crisis that is potentially, well, not is happening, and then has the potential of getting far greater in the future. We as real estate investors and business owners, we want to look into the future. And one of the things that when we look into the future is leveraging. Now, leveraging our money, leveraging knowledge, leveraging research. But this is where people overstep. And this is a patient game. And so buy real estate, go back to work, just let it get boring, stay boring. And guess what? That financial future is right in front of you.
Now, Patrick, we cover these concepts and many more very, very in depth at our Winning in Real Estate events, our WIRE events. And we have several of them coming up in September. Patrick, we have one next week, by the way.
We do.
So if you have 90 minutes, folks, if you have 90 minutes, you're going to want to come to our WIRE events. If you have 6 hours, you got a half day, and you really want to dive deep into the 15 steps to success in real estate, you want to come to our intensive. That one's at the end of September. I don't know, I forget the exact date now, Patrick, but it is at the end of September. You want to get registered for that, folks, a real estate intensive. And then, Patrick, if someone has 1.5 days and they want to come to our real estate investment network summit, that's in November. And that is going to be 1.5 days of pure magic. We're going deep into everything real estate. So really, Patrick, someone watching this, there's no reason for you to attend any one of our events, folks. There's no reason for you not to attend any one of our events, whether you have 90 minutes because you're super busy, you got 6 hours because you really want to dive deep into the 15 steps to real estate success, or you have 1.5 days and you want to surround yourself with this incredible like-minded community of people, with economists, with leading edge economists that are telling you exactly where the economy is going. Patrick, we have all the events coming up the rest of this year. This fall is a huge fall for Rain.
It is a huge, huge fall, and 28 years we've been leaders in that education, research, and investor solutions space. And we look into the future today. And yeah, there's lots of confusion of what's going on economically, but in that confusion will live some really, really great opportunities if you're prepared. And it's like, how do you look at leverage? You have to have this view of the world that isn't just in front of you. When we look at what's going on economically, we actually want to leverage what's happening economically, JG, to step into those opportunities to create that financial certainty, that security that we're looking for into the future. And real estate is a way to do it. And lots of opportunities are going to be are presenting themselves and will continue to present themselves. Leverage that research, leverage that knowledge. This is the time to prepare for that upcoming and that emerging future in the world of real estate.
Listen, fact is, folks, is that the economy is going through a shift right now. The economy is going through a resurgence. It's going through an evolution. And this is where the opportunities show up, Patrick. There has never been a better time to get prepared to invest in real estate. Whether you pull the trigger, if you're asking yourself, should I pull the trigger right now? Well, come to one of our events and we'll tell you whether you should pull the trigger right now. The fact is, though, you got to get ready, Patrick, because an amazing wave of opportunity is coming. And those who are ready will create generational wealth. Those who are not ready are going to sit on the sidelines hoping, how did I miss this one again? Why does this keep happening to me? Folks, this is get ready.
Yeah, don't chase the wave. Get out in front of it. Leverage that knowledge, leverage that research, and leverage your capital in a really powerful way. JG, I think this is a real step in the right direction for people to think about leverage. It isn't just that 100,000 up front and what it'll do for me in the 2, 3, 4, 5 years. We look at that 100,000, what does it do over 10 and 20 years? And it's pretty profound.
And as we wrap this up, folks, with regards to our missing millions, keep this in mind. People miss millions of dollars often because they're short-sighted. And that's what we don't want you to be. We don't want you to be short-sighted. We don't want you to think about today or this week or this month. We want you to look into the future and understand what your capital is doing, understand how the real estate market is behaving, and understand where the real estate market is going so you could comfortably invest in real estate, leverage your capital to create financial security, financial certainty. And Patrick, this all leads to financial freedom.
It does. And start on the journey today. Community, culture, environment, Rain's here. We got your back. Join us for any of these events that we got coming up. You'll do well at it.
All right, folks, we'll see you soon.